Hi. Let's learn about checks, and how they work. A check is a written, dated, and signed draft that directs a bank to pay a specific sum of money to the bearer. The person writing the check is known as the payer, the person who receives it is the payee, and the bank on which the check is drawn is the drawee. Checks serve as a way to instruct a bank to transfer funds from the payer's account to the payee or the payee's account. This allows for monetary transactions to occur without the use of physical currency. Checks can be used to make bill payments, gifts, or to transfer sums between two parties. Checks have been around since ancient times, but modern checks became popular in the 20th century. While overshadowed by electronic payments, checks are still used today. Checks share key features, such as the payer's name and bank, lines for the date, payee, and amount, as well as a memo line and coded numbers along the bottom. The back of the check includes an endorsement line for the payee's signature. Different countries may use different formats. There are various types of checks, including certified checks, cashier's checks, and payroll checks, each used for different purposes. Certified checks verify that the drawer's account has enough funds, cashier's checks are guaranteed by the banking institution, and payroll checks are issued by an employer as payment to an employee. When someone writes a check for an amount larger than what is in their account, it cannot be negotiated and is referred to as a bounced check. This typically results in penalty fees for the payer and sometimes for the payee. Other checking account fees can also apply, such as a monthly service fee or per check fee. Banks have different policies on bounced checks, but they often charge overdraft fees or non-sufficient funds fees. Some banks may provide a grace period, such as 24 hours, in which time you can deposit funds to avoid the overdraft fees. Funds from a deposited cashier's check typically become available the next business day, although a bank may place a hold on some or all of the funds if there are concerns about the check clearing. Checks are a useful financial tool for making payments and money transfers convenient and potentially safer than cash. Different types of checks are designed for different purposes and risk levels. Here are 5 key takeaways. 1. A check is a written, dated, and signed draft that directs a bank to pay a specific sum of money to the bearer. 2. Checks instruct a financial institution to transfer funds from the payer's account to the payee or that person's account. 3. Check features include the date, the payee line, the amount of the check, the payer's endorsement, and a memo line. 4. Types of checks include certified checks, cashier's checks, and payroll checks, also called paychecks. 5. In some countries, such as Canada and England, the spelling used is check. Hope this would help. Thanks for watching.